Did you encash your mutual funds or equities and created a huge gain and use that to buy a property? Well, do you know that whole amount of capital gain which would have occurred on your mutual fund or an equity investments can 100% be exempt provided you invested in a real estate and you met certain conditions? Yes, in this video, we'll go through all those details to help you decode how you can claim that exemption. Before that, a quick introduction. My name is CA Puneet Agarwal. I'm the founder of Banyan FA LLP, where we are one-stop shop for all finance needs of people. Please follow us on Instagram and YouTube, where we release weekly videos related to personal finance. So friends, how does it work? Section 54F of Income Tax Act comes handy to you, to your disposal here. Do consider to consult a tax advisor, because what I'm going to tell you is going to be very generic in nature and specific conditions might kind of require you to take your situations differently. So whom is it applicable for? Actually for all individuals and HUFs, this is applicable. What does it say? That if you sell any asset other than a real estate, so example, equities, gold, you can sell it and let's say you had certain gains over there, and provided you have not got more than one property. So example, either you have no property or you have only just one existing real estate property. If you've got more than one, not allowed. So first thing, one property. Second, the investments which you have sold have to be categorized as long term. So agar let's say aapne short term gain say you had some equity investments which you sold off, you will not get any exemption. It has to be held for long durations of time. Third, you do not purchase ek aur property over and above what you're planning to purchase now. Otherwise, it will not work as well. So you do not purchase any other property in 1 year or construct any other property in 3 years from the date when you kind of sell your assets. Otherwise, kuch nahi milne wala, wo wapas le lenge aapse exemption. Then the fourth one is that the property which you're planning to buy out of the sale proceeds of your, let's say, equities and mutual funds or gold, as the case may be, you do not sell that property for 3 years from the date when you purchase that property. Example, अगर आपने 1st January 2024 में property खरीदी है, do not sell it for next 3 more years. ठीक है? What's the fifth condition? The fifth one is actually to create a little bit of balance. What they say is that if you buy a new real estate property for greater than 10 crores or sell assets above 10 crores, then any amount above 10 crores will be ignored to ensure that there's fair balance. Otherwise, people पता चला hundreds of crores के assets बेचकर, then they are able to kind of amass tax-free assets. So they've tried to cap it at 10 crore. ठीक है? Few timelines you need to be very, very aware of because they can make or break your exemptions. Pehla, you need to purchase the new real estate you're talking about within 1 year before or 2 years after the date when you sold your investments. I'll give you an example. Let's say you sold your investments on 1st January 2024. You can buy a new real estate 2 years ahead, which means 1st January 2026 tak you can buy and you're fine. You'll get the exemption. Or let's say you had bought a real estate in 1 year prior. Example, if you bought any real estate 1st January 2023 se lekar 1st January 2024 tak, that will also get exempted. Okay? Real estate may not always be very quick purchase. It may take some time. You need time. So that's why the provision is there to give you time. But you may also want to construct a property, land खरीद के उस पे बनाना, उस पे तो बहुत time लगता है. So then they've given that option as well, that you need to construct your house within 3 years from the date of sell. So just to ensure that you keep that timeline in mind. But क्योंकि multi-year time frame है, you need to ensure that the money which is not being used so far, you go to your bank and open a capital gain scheme account and deposit it there. As in when you need money to purchase or build your house, you withdraw from there and you will get your exemptions. Now, how much exemption can you get? Let me help you with a small calculation. You have to invest the full net sales proceed of your investments. Otherwise, you will not get a proper exemption. Let's take an example. Let's say you sold your equity shares or mutual funds worth 50 lakh rupees and the cost of them was 20 lakhs. So you had a gain of good 30 lakh rupees. Now, if you buy a new real estate anywhere between above 50 lakhs, example 50 lakhs ka kharida ya 60 lakhs ka kharida, you'll get everything as exempt. Like the whole 30 lakhs would be exempt because your buying price of the new property was higher than the sell price of your investments. What if you bought it at a lower price than what you sold? Example, the same example, your sale price of your investments was 50 lakhs. The cost of them originally purchased was 20 lakhs and you had a gain of 30 lakhs. Now you want to buy a property which is costing 40 lakhs. So it's 10 lakhs lower than your sale price. So what the government says, you will only get proportionate exemption. So in this case, it would be your gain divided by the total sale proceeds of your investments into the property value. So it will be 30 divided by 50 into 40 lakhs. So you'll get only 24 lakhs worth of exemptions, right? So make well use of the capital gains of this section 54 to get your gains completely exempted. Thank you.